when it breaks, it actually gets fixed faster and makes the product grow better, improve, and whatever else. I've always said to my team, if you can get me something that's 80% of the way there and keep it moving, we'll always be ahead, because
welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. This is the podcast for Angel Investors Network, and we're really excited today to be talking to Jonathan Rose of the License Corporation and License Authority. Jonathan is a serial entrepreneur, has started and exited a number of businesses, as well as runs a hedge fund and a venture capital fund, and is also growing and scaling his own companies as well. So lots of incredible nuggets here for a founder, an entrepreneur, somebody who's scaling and exiting their business, as well as the investors looking to invest in those types of companies. And we've already scheduled a second interview with Jonathan because we couldn't get to everything today, but you'll see that in the upcoming emails and whatnot. So as always, like, subscribe, and share, and let us know what you think of this episode. Take care.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Hi, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. I'm here today with Jonathan Rose. Jonathan, how are you doing today?
I am fabulous. Thank you so much for having me.
Absolutely. Delighted to have you here and looking forward to the conversation. So, Jonathan, before we dive into the License Corporation, License Authority, and all the things you do in the licensing world, why don't you tell folks a little bit about yourself and how you got to where you are today?
Yeah, I mean, I have been a serial entrepreneur from a very young age. I started my first company at 14 back in the UK. We sold clothes. We went door to door and kind of grew a business from there. And then that morphed into like a grey import-export business where we were bringing in designer labels from Eastern Europe and selling that. So the entrepreneurial vibe and dream was in me from a very, very young age. And then, that kind of advanced as I went into university. I did management, but most of the time I was off working, building companies, trading in stock markets, real estate, and always had a passion for three things: technology, finance, and sort of real estate, I suppose, is the best way to describe it. And so my first job out of university ended up being a buyer for a large food company, but that wasn't really where my passion was. And then I went into more technology, started designing telemetry chips for pacemakers and allowed them to communicate with docking stations. And it was like really technical and fascinating. And then I actually got recruited into one of the early .coms, which was doing genealogy. And I ended up as the CEO of that company at a very young age, 21. And we grew, we're, global. We had offices on 3 continents, and we ended up exiting that business, which was really, really exciting. From there, the investors who were behind that .com ended up, they had a business, and I went into their business and helped them grow and morph that business. And we grew that and expanded it. And that actually became a publicly traded entity in the UK, which was really exciting. So a different form of exit. And then really went into property development on a massive scale, building thousands of houses and solar power plants, wind farms, being a property developer in Europe, and then also again in America. I worked in Manhattan and Beverly Hills, as well as all over Europe. And it was a really, really exciting journey. Built another technology company, which is an advanced neuroscience company, which we also exited. And then kind of was getting ready to retire. Saw an opportunity in the markets and basically traded derivatives and stocks and shorted the crash of 2008. And then basically did retire, moved to Colorado, built myself a log cabin in the mountains and stayed at home with my kids. And then unfortunately, the one thing that I think many entrepreneurs have in common, I got divorced. and had to go back to work. So I built an ultra low latency event driven hedge fund. We use natural language processing to read and interpret the direction of trades in the billionth of a second. And that hedge fund did really well for many, many years. And then we moved into venture capital and private equity. As a VC fund, we, were able to invest in founders. And one of the things we really found along the way was that people didn't know what they didn't know. And having really experienced seasoned operators in there was critically helpful. And we started to provide that role in a more structured fashion like a private equity company. And with a lot of those ventures, a lot of the technologies that were created were utilizing prior knowledge and prior experience. And that was how we came to License Corporation.
Interesting. Well, that was a winding journey to get to where you are today. So, first off, congratulations on your successes. I'm sure it wasn't all easy and all rose-colored glasses, but it sounds like you did a lot of different things. However, if I'm reading between the lines, it was a crazy focus on whatever you had going on at the time to make it successful. Is that correct?
Correct. You have to be unbelievably intensely focused, and it's very funny. One of the things I often hear when I go to universities and I'm talking or whatever is one of the other people will say, find your passion. And I actually strongly disagree with that. I think you should find a problem that has to be solved. And when you find that problem, you will become so unbelievably, insanely passionate about it that you will have found, your passion will have found you rather than you finding your passion. Most of your passion is just a hobby.
That's interesting. I hear a lot of people saying that same thing. And I've always said it doesn't make any sense. Like, how do you find your passion without doing a lot of things, right? And a lot of people, especially in the academic world, will talk about this. It's like, you haven't really gotten out there and done it yourself, though. So how can you preach about that? So I am curious about your take on that. Finding a problem. There's problems everywhere in the world. So how did you go about finding these problems that you ended up becoming passionate about?
Yeah, I think your passion is your hobby, and that you should do as your hobby. When you find a problem, it's interesting. So with License Corporation, one of our clients had 55,000 rental properties, and they got sued in a class action suits in Chicago. And when they got sued, they found out that they didn't have their business license. They didn't have their appropriate license. And everyone would be like, oh, everyone has all the licenses. That was something we found very differently. But they had this problem because when you don't have a business license, you have a variety of knock-on effects. Your insurance is invalidated. You don't have work comp. And the CEO of the company or the chairman goes to prison or potentially faces jail time because it's criminal charges, because all the civil charges become criminal. So someone came to me and said, hey, this is the situation I'm in. This is the circumstance I'm dealing with. Help. And when you can find, when you become that source of knowledge or expertise that people come to you with their problems, you get presented with all different kinds of problems that you can then solve for. And the most critical part of the process then is working out how big the problem is. So basically, TAM, how complex the problem is, i.e. what's the moat going to be? And then understanding where your particular skill set fits within that and who your customer base and clientele is and if you have access to. And so that's been how I've gone about solving problems like that. With the hedge fund, we were sat there, we understood the market, we understood the headlines and the event-driven trading, and we understood the technological limitations of the existing system. And at the time, they were using an interface that sent out each piece of news to one person at a time. It's called Unicast. And by enabling multicast, by enabling everyone to get the same data at the same time, that allowed this new opportunity, this new paradigm to open up so that other people could trade in the market. And so we actually were very instrumental in getting it to go to multicast from Unicast. So it's seeing the problem in the market, seeing how to address the problem, and then having the right people available to you to help you address that problem.
Right. And I think that's a challenge that a lot of people run into is that, that skill set piece is really, really important, right? I talk about this a lot with folks about the visionary versus the integrator or the operator. And we work with a number of funds and investors who bet on the jockey, not the horse, right? Because they need to know that there's that experience there, that experience as a business operator, a CEO, somewhere in the C-suite, someone like that understands that. But what I found is that the operator is not necessarily the same as the person who understands the problem inside and out. Have you guys come across that, and how have you guys handled that?
I would say 9 out of 10 times, the visionary, creator, problem finder, problem understander is a completely different person to the problem solver. And I think when you look at any business, when you look at any corporation, when you look at any entrepreneurial opportunity, there's a reason that solo founders have a harder time getting funding, is because there is an operational element, there's normally a technology element, and then there's a sales element. And if you are trying to be out selling, chances are you're not building the right product. If you are out building a product and spending all night, all day locked in a cave building your product, you're not going to be out selling. And so having those multiple facets is incredibly critical. When we were building our product, all of our best learnings came from us being out in that Salesforce position of being able to ask and understand the needs, wants, and desires of the end user and the clientele. In the businesses that fail, generally there's someone who believes that they understand the problem and they believe that they have greater insights or knowledge to the problem than the person who's actually out there in the market solving the problem at that time. Very, very, very rare that you will find that. I mean, yes, you can, and you will be incredibly, incredibly disruptive, but it's very rare. I mean, if you look at any of the great founding teams of any of the really good companies, the quality of the talent that they've brought in and the quality of the team that they've brought in has been more pivotal to success than the one inspirational founder. While they get a lot of the credit, it's the guys that are in the trenches doing the hard work on a day-to-day basis that are actually building the company and building the systems and building the operations and processes.
Yeah. And so how do you, throughout your career, you've done a number of different things in completely seemingly disparate industries, right? You're talking about there is the real estate side of things, there's the hedge fund and the trading side of things, to the venture capital, to now licensing and regulatory aspects of it. How do you guys build that feedback loop? Because like you were just saying, I really like what you put there, which was the salesperson who is going out there and trying to sell the product, even at the earliest, maybe a pilot program or beta phase, is really the one who is getting that feedback from the customer and figuring out what the problems are that needs to be solved. And that might be the visionary CEO who's going out and doing the market research to come up with this. But how do you get that back over into the operational side of things so that people can do that? And then the third piece that I would add of all those people, you have the person who's building it, the person who's selling it, and a lot of times they're trying to raise capital too, right? And so you can't do all these things very, very well. So how did you guys solve for some of those problems?
The first thing I'm going to say, and the reason I've been able to be so successful, is process flow. So we design the most complex, comprehensive process flows of every touch point in a business from start to finish. If you can build the difference between being an entrepreneur and a successful business owner, someone who's out there trying and someone who's crushing it, is the ability to create automations that replicate you or yourself or the services or things that you do exponentially over and over and over again. So the perfect example is your lawyer. Your lawyer might be the best lawyer in the world. They've got incredible knowledge. They're brilliant. They're fabulous. However, they are a single producer and they can only earn as much as the number of hours that they can bill. If you take Elon Musk, on the other hand, he has learned to distribute and disseminate knowledge across multiple people and have lots of different people with incredible specialities in very disparate industries building what he needs. He doesn't need to be the smartest person in the room, and he doesn't need to have all the answers. What he needs to do is bring together and integrating. And basically, that's one of the roles I've played primarily in my career, is what I call translator, where I'm translating between the sales need, the finance, the financial need, the strategic need, and then the technological product development capabilities. Everyone talks in different languages. And if you can unite a company with a common language, which for us is a process flow, showing everyone how what they're doing matters and whatever, then you can bring everyone into this sort of harmonious relationship where everyone's driving and going towards a common goal.
I like that. Yeah, I mean, one of my books was written on systemize, standardize, and optimize using U.S. military principles, right?
Yeah.
And so I think it's really important that people get that. And I found that even myself, right, understanding it at an intellectual level versus implementation is very, very difficult, right? And going back to what I was saying earlier with our investors that look at operators, a lot of the times what they're looking at is that capability to take the process that they know in their brains, like you were saying, the attorney who happens to know all of the ins and outs of some area of law. That's great, but you need to be able to replicate yourself, and you can't grow an exponential business if you can't do that and be able to turn it into something that you can sell over and over and over again, right? And have a similar outcome. So we always talk about a system is you have a defined set of inputs, and if it goes to the system, you should have a very exacting set of outputs, right? A result that you can almost measure, with a microscope. So I think that's what you're saying, is that it's really important to identify what the process is from start to finish very, very early on, and then start finding the people that can fill those roles along the way.
One of the biggest things I believe is that you have to leave your ego at the door. You cannot be egotistical, because if you know best and you know everything, the chances of you succeeding are actually much, much lower. So I think when you look at these situations where you're looking at that scenario, you have to bring in a team of exceptional people around you who have greater knowledge than you in all of the areas, and you trust and empower them to go and do what they're good at.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
Yeah. And I think that's where the difference between being a founder and a visionary and being an operator or CEO is a little bit different, right? I'm curious what your take is on that, because I find that CEOs are not necessarily the best entrepreneurs and vice versa.
So I think what I would say is there are millions of people every day that have millions of ideas, and that there are an incredibly small handful of people that can take that idea and execute it and bring it to fruition. And I think it's the difference between the people who talk and the people who do. And I don't know necessarily that the title defines a person's ability to do. I think it's actually there are doers and there are people who talk about it. And so that would be where I would say that defining characteristic lies, is that, you need doers. And a lot of organizations have these brilliant ideas, but they don't have people that are executing. They don't have people that are building a process. They don't have people that are making it replicable. And that leads to this sort of disharmony where you have a brilliant idea, but nothing transpires. Because The thing you see as a VC, and this is the funniest part of being a VC, is you will see the same idea again and again and again and again. And everyone needs you to sign an NDA because they've got the best idea in the world that no one's ever thought of, blah, 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 blah. And it's like, dude, I've seen this idea 30 times in the last month. Here's where each of the people are in this process. Here's where you are compared to them because you're so closely guarding this perfect idea that you haven't dared to bring it in the world and execute. This company that's way ahead of you, they went out there and they said, this is a great idea. Yes, someone could copy us and we're fine with someone copying us. We're going to take first mover advantage and we're going to make it happen. We're going to go have some sales calls. We're going to go talk to people. We're going to spread our idea around. We're going to disseminate our idea and we're going to bring it into the world. And that's the difference is how are you going to bring your idea to life and put it into the world and execute?
Absolutely. So momentum over perfection.
Perfectionism is actually a very, very unhealthy trait. I would say it's very toxic to organizational success. When I look at what we build, I build things to fail. I build things to break. And I design systems that have a feedback loop in it that when it breaks, it actually gets fixed faster and makes the product grow better, improve, and whatever else. I've always said to my team, if you can get me something that's 80% of the way there and keep it moving, we'll always be ahead because the last 10% normally takes longer than the first 80 or 90%. And I find that a lot of damage is done holding back a product to try and get it from 80 to 90 and then 90 to 100. Because a lot of the feedback you're going to get from your early users, from your early testers, from your customers is actually going to be counterintuitive to what you thought because you're not going to know as much as you thought you knew. And a lot of the time that you spend perfecting that 10% is actually trash because the product's going to change, morph, pivot, or do something slightly different in a different way where you didn't need to do that 10% or 20%.
Yeah, absolutely. That's a huge piece for people to understand is that getting to market is vitally important, right? I love the saying that no business plan survives first contact with a customer, right?
Nope.
We all think that we have all these great ideas and that's going to work and that you're going to put it out there and everybody's going to love it and then crickets, right? And then you get a little bit of traction and then all of a sudden somebody comes back and says, what about this? And I love that scene in Jobs when he goes out there and he sells the very first computer that they build and they're really excited about it. And the guy's like, that's great, but where's the screen? He goes, I'll get you that's coming up next, right? He just goes right back and starts building it, right? So I love that. I love that analogy. Now let's talk about on the VC side and what you guys are looking at. You're obviously seeing deals every single day, right? What are some of the top check boxes that you need somebody to be able to check quickly and easily to say, yes, we'll even look at this deal? Because I find that that's where a lot of people have a lot of mistakes or bad ideas about, okay, well, we have the best technology, right? They try to get to the 90% or the 100%, go to the VC and say, we have the best thing. And you just alluded to that. So what are some of the things that you suggest to people when they are actually going after some sort of venture capital funding?
First thing I need to see is a massive TAM. If you don't have an absolutely enormous target addressable market, if you don't have a lot of money that you can go after, even if you gathered large market share, you can't justify the dilution, expansion, growth, and time to make it worth anyone's while. So we look for massive TAMs. We look for a highly seasoned founding team. We're looking that even if one or two of the people doesn't have lots and lots of knowledge, that the rest of the people do, that they have the confidence and lack of ego to bring in people who are incredibly experienced and bring that knowledge and that executional capability to allow them to do it. I think, when you look at Google, you had Brin and, they brought in Schmidt and they brought in this old seasoned hand that had that knowledge and that expertise and that execution capability. That was actually when they exploded. I mean, when you look at all the great corporations, the old seasoned wise kind of experienced hand comes in and it can guide you, because the most important thing is you don't know what you don't know. And when you are learning the lessons, you don't want to learn them with money. You want to have had someone else learn them with someone else's money, and then you don't make those mistakes. So, my big one is always, you don't know what you don't know. So I'm looking for a humble enough founder that when I can give them feedback on where their flaws are, where their problems are, where the issues are, the things that they've not thought about, that they sit there quietly, they think about it. And normally they'll come back with, I'm going to go think of that and I'm going to address it, or I'm going to solve for that. And the one who comes back very, very quickly with, I'm wrong, you're not a fit for me because you're not coachable. So I'm looking for a coachable leader. And then I think a massive factor that I now look for that I didn't look for as much is traction, that you have some kind of traction in the market, that you have a real customer, that you have a real need. There's a lot of products that come to us and it's like, that's a brilliant idea. That sounds fabulous, but who the hell is going to buy this? Or why are they going to buy this? Or what need are you solving for? Or, God, this is going to take them an awful lot of effort to implement and they're never going to do this. It's got to be very, very simple, quick and easy. It's got to reduce a lot of work and labor and human capital and everything from the flow. And you aren't necessarily going to know that without having gone out and talked to customers and got customers on board.
Right. No, it's so important, right? Like we talk about traction all the time as well at our company, because so many folks will come to us, say, okay, we want to raise money. And that's great. Wonderful. Congratulations. Doesn't everybody, right? Everybody would just love to be throwing gobs of money to say, yep, I'm going to go ahead and grow this business. And for some reason, this message keeps getting lost, which is, why should an investor take a gamble or a risk on a founder who hasn't gone out there and been resourceful enough to generate any sort of traction, right? And get to that level.
Or technically capable to have produced a product that could get traction.
Exactly, right? That's another issue, right? A lot of people will think, well, it's obviously a great idea because I had this problem. It's like, okay, well, it's just like you said, how many other millions of people have that problem? Or is it just maybe hundreds? And if it's hundreds, well, those hundreds better be Fortune 500s, right? That better be who has the problems. Because it is one of those, kind of cat and mouse games, if you will, when it comes to product market fit and figuring out if you're actually solving a real problem, and then figuring out if people will pay for that problem. I think that's another really big issue that I've run across with entrepreneurs, that they say, obviously there's a problem. Look how many people out here have this problem. I say, yes, but does your solution solve it in a way that's going to have any monetary value, right? Are you actually going to build value doing this? Or is it just like, it would be a nice to have kind of thing, right? And I think that's one of the issues that we run into a lot, especially with the earlier stage companies. And most companies, 0.15% of companies actually get venture funding. So it's not a lot. And a lot of people can learn from what you were just saying and think.
I think it's interesting when you look at funding, we break it down into different buckets, and making an astute choice as to who your investor is actually critical to your long-term success and particularly to your exit. Venture capital is not well suited to many of the companies that we see. There's a lot of companies that are much more suited to a family office or a long-term stable investor, or, a wealthy beneficiary uncle kind of investor, where it's more of a cash flow business. It's more of an operational business. It's not necessarily an exit business. And so a lot of people don't realize just what the right kind of investor is. And then there's a lot of times where what we look at in our investment pool and our investment groups is you're actually looking for a group of brand evangelists who are out there actually selling, marketing your product and giving you access and entry to other stuff. And you're giving them a piece of the pie in return for the access that they have to end users or other things. And so I think people are very misinformed about the different types of capital existing and why and when they should use them and what they should use them for. venture capitals tend to flock together. They tend to move as a pack because that reduces the risk. But one of the really important things about venture capital, generally speaking, they are fuel being added to increase sales. So they're bringing the additional capital to go get you a ton of sales. When you're at that very early stage, when you're still moving from idea to product to cash flow and revenue, it's a very, you're in the angel world, but it's a very hard conversation to have with most VCs. And it's very hard to justify why they should fund you. It's very hard to have those explanations. And there are more people playing at that early stage of the game. But quite frankly, 99% of those companies are going to fail. I mean, that's just the way it is. For lack of experience of the founder, for lack of product market fit, for whatever it is, most of those companies are going to fail. Those are very high risk investments and tends to be very small checks. And very few of them are going to succeed. So it's kind of interesting. I mean, when I think you're, as a founder, starting to look at the situation, venture capital should be something you're looking at much further down the line. And only if you are going to go through multiple rounds of fundraising because you have a very, very high cost of getting to market. Outside of that, very often bootstrapping, or other strategies are much, much better strategies.
I'm really glad you said that. And I know you run a venture fund and you've done hedge funds, and you guys are bringing your own products to market too, which we haven't really had a chance to talk about. But running Angel Investors Network, we tend to get a lot of companies that come to us saying, if I just had $500,000, I could go launch this product, or I can go launch this. And the fact is that during the dot-com era, when it cost $1 million to get a server up, and that was the only way you were going to be able to get anything out there, okay, maybe it made sense, right? But heck, even Dropbox was able to start generating a lot of traction without even having a product yet, right? And doing their smoke screens, and it was pretty impressive. And so we see and I tend to be a little bit skeptical and harsh on some people, but the idea that you can come to me and say, if I just had you invest $500,000 or $1 million, then I'll make this thing successful. What proof do you have, right? What proof do you have that you could make this thing successful? Because right now, the cost of acquiring a customer in a lot of cases is microscopically smaller than what it used to be 20, 30 years ago, right? And you can do it in so many different ways between social media and email marketing, going to events and shows and that, like this, on and on and on. And the barrier to entry into almost any industry has been all but eradicated, right? There's definitely certain industries where, like, if you're telling me you're going to go to a waste to energy treatment facility and you need $15 million to spend up a plant, okay, that's one thing, right? Maybe going out there and obviously anything that requires FDA clearance, that's another issue. But outside of that, we generally try to tell people, go out there and figure out a way to determine what your customer acquisition cost is and find a way to liquidate that opportunity as quickly as you can, because unit economics are going to be something that any investor is going to look at. And if you don't even have that, they're not going to help you they're not just going to be there as a donor, right? And give you a charitable contribution so you can flush their money down the toilet. So I'm really glad you talked about this, because we do the same thing. We want you to try and figure out a way to sell your way out of the hole first, if you can. And of course, there's so many resources to help you do that. And then if you find out, like you were saying, the cost to go to market is prohibitive in certain cases, that's when investors can come along and give you a boost. But even then, they're looking for proof that you can take their money and turn it into a lot more, right?
And not necessarily prohibitive. It's just that you can expand exponentially faster with a lot more resources. If it's a prohibitive kind of situation, then that would be one we would run away from. Because then if your customer acquisition cost is just way too high, then you're never going to make money. It's very much, right now I can sell this to 1,000 people. If you give me X amount of money, I can sell this to 100,000 people. If you give me Y amount of money, I can sell it to 1 million. And if I give it to Z, I can sell it to 10 million. And the biggest problem you have is if you don't know your COGS, your cost of goods sold, then as you increase your sales, you lose more money. So that knowledge of your COGS before you go into any viral growth cycle is absolutely critical. And so to make sure that you are both profitable and that you have good cash flow. Because the other thing I would say is most businesses die because of cash flow, not because of profitability. And so one of the things we focus on is, what is that time value of money of, accelerating going to market, but what's also that time value of money of how long is it from you expending your money to buy the product to you actually receiving the money back? And that's where I think you talk about social media. Your time value of money there is almost instantaneous. I mean, like you're really not spending much money, but when you do spend your money, you're getting your clicks almost immediately. You're getting your video seen almost immediately. So you can get a very, very rapid feedback cycle. If I spend $10 on advertising, I got $50 in sale. I spend $10 on advertising, I got $120 in sale. Or I spend $10 in advertising and I got zero value in sale. The feedback loops have changed. I mean, when it used to be, when I first started out, we would have to book a place in a magazine or a newspaper. We would have to go to print, with our pamphlet that was going in or our catalog, or we would have to print on their cycle. And then there was distribution time. Then there was distribution. Our lead time could be 6 or 12 months from us actually having it to the advertising placement taking place. That world has changed. And that is one of the things that's transformed and accelerated the ability to be an entrepreneur. However, the caveat to that is that the skill set that existed then, the knowledge that existed then, is still just as critical today in how do you influence people? How do you get people to buy your product? How do you get demand? And how do you manage that demand, manage expectations, and produce a product that people want and make sure that your product is financially viable and all of that, financial piece of the puzzle is actually well covered, well managed, that you have adequate cash flow, et cetera, et cetera, et cetera. So the skill sets have remained the same. The thing that has changed is the velocity of time to get to market.
Absolutely. Absolutely. And Jonathan, this has been amazing. I think there's so much more we could talk about. We can go on for quite a while. However, we are at time. So why don't you tell folks how they can find you? How can they connect with you online?
Yeah. License Corporation is our main holding vehicle for the License Corporation company. We have license regulator and license authority with which we sell to the government and to businesses. So if you're a business and you want to get all the right licenses for your business, there are a lot more that you need than you realize, and you're probably not compliant, especially if you're selling products online or things like that. So that's one of the places. I'm on LinkedIn, Jonathan-Rose, and always happy to chat with people and move through and help anyone that we can in any way we can. So yeah, we have a variety of different ways to kind of talk to us and communicate with us. But yeah, it's been great to talk, and I would love to possibly do another one where we talk about License Corporation, what we're actually doing.
Absolutely. I think we'll have to do that. We'll schedule a follow-up on that one because I think that's really important too. Like I've started over a dozen businesses myself and found myself pulling my hair out, just trying to figure out the licensing aspect of different business. Like you were saying, going online is completely different than brick and mortar too. So I think we'll have to have another call on that one as well.
Yeah, no, it's a job that requires tens of thousands of people to spend thousands and thousands of hours. And now we've been able to automate that process. So you can actually make sure you're compliant in fractions of a second.
That's awesome. Well, we're definitely going to be talking about that, and we'll make sure we have all that information inside the show notes and where you guys can find this. So, Jonathan, thanks so much for being here today. I really appreciate it. And for those of you guys out there who are watching this, as always, like, subscribe, and share. Let us know your thoughts. This has been the Angels, Exits, and Acquisitions podcast. Jonathan, thanks so much for being here.
Thank you very much.